Welcome to the 2024 Economic Preparation and Depression channel. I'm your host, Tony. Thank you for joining me on this weekend edition, March 2, 2024. Hope you're having a great weekend. I just want to talk about three key indicators here today. Please be sure to subscribe to this channel. Preach to me for the latest interpretation of financial news. We're not financial advisors, but we interpret financial news as it sees fit from the major markets. So right now we have CNBC reporting last week that key and Fed inflation measures rose 0.04% in January, and now February is expected that we're expecting that inflation has not gone down as well. We'll get those numbers next week, but up 2.8% from a year ago. As you can see, people are spending more. The personal consumption expenditures price index, excluding food and energy costs, have rose 0.4% for the month and 2.8% as expected. So that tells you that people are spending more and getting less in America. And that's not a good sign. The 10-year note, as you can see, is on the rise, 4.280%. The 10-year and the 2-year has been rising steadily this year. Initial jobless claims totaled 215,000 for the week ending February 24th. That's up 13,000 from the previous period. That's more than the 210 estimate. So we're 5,000 above the estimate, according to senior economists. And this is not a good sign, ladies and gentlemen. Inflation has not gone down. It's continuing to remain steady. And we don't know when they're going to get to the 2%, the Fed Reserve's 2% target rate. But that looks to be a long way off here, according to a lot of senior economists and estimates here. So we haven't even included food, energy, utilities, transportation costs rising. This is just the baseline here, and you can see many people are feeling it still as they're in the grocery stores, and the utility bills are going up. Many people's light bills, cable bills, phone bills are steadily inching up, slightly, ever so slightly. But these little taxes and fees make a big difference, and this is going to be the killer of this economy. High taxes, high fees, and low wages, or wages that are stagnant. That's been the continued theme throughout this pandemic era, post-pandemic era, if we will, economy since 2021. So how the U.S. economy could slide into a Japan-like lost decade, and really is the case here. This is an article that came out March 2nd, 2024. This is from MarketWatch. The real danger for the U.S., as it was for Japan, is that industrial policies encourage investors to take poorly measured risks. As you know, everybody's looking for how to extend their dollar, especially in the stock market, investing. I'm not a financial planner. I'm not an investor, but I know that a lot of people are taking investments, whether it be crypto or investments in the stock market. What you have to realize is that even with economies that were booming economies, so like we look at, places that were apparently booming before the collapse, like Japan and Venezuela and Greece and Iceland. People forget about these economies that were booming before something happened, and whether it was a bank collapse or a currency collapse. And this is where we're heading. In Japan, they had a lost decade, with stagflation, missed policies, and things of that nature. This is what we could be heading to as the United States heads towards 2030, the 2030 agenda that many of you have been talking about, with Babylon and the United States turning into this CBDC currency that many channels talk about. So this is really going to be interesting. See, the stock market, here we go again. This is USA News and World Report. Stock market entered another winning week with more records broken, more gains with the stock market. And this is going to be dangerous because every time we get these stock market heading toward 40K or 50K in points, you have to remember, in a collapsing economy, the debasement of currency, the weakening of the US dollar is contributing to this. So it's taking more and more dollars to get the same goods and services. So expect everything to go up, whether it's gold, silver, crypto, bonds. Everything is going up because the currency is debasement. The currency is deflating. The currency is is being debased daily. The more you print up, the more the debasement of the currency. And so this is what it is about. So yeah, the stock market should go up. It's got a $12-15 trillion injection of money. Stimulus checks are long gone. That's a thing of the past. I think last stimulus check was issued 2 years ago now. We're in 2024, so that's long gone. But the stock market is still being artificially propped up by the Fed and by the banking industry. Not just the stock market, but bonds. I guess the safest thing would be probably T-bills and things on the future, municipal T-bills, things of that nature, 2-year Treasury bills. But even that is subject to risk if nobody wants to buy them. If all the economies are inflating, Europe's economy is inflating, Asia's economy is inflating. Hey, what can we do? You know what I'm saying? So this is going to be a big issue coming into the future. Where does they draw the line? How far do they want to raise these rates if they do decide to raise the rates, the Federal Reserve Bank, later on this year? And how far they want to lower it? I don't think we're going to see, in my opinion, a 0% interest rate again lowering down that far. I don't think that's going to be the case. Even if they do begin lowering it, it's going to be a slow and steady lower, maybe 25 basis points if we get one this year. We may not get a rate late lowering this year. Nobody knows for sure, but what we do know is that we have to continue to prepare, ladies and gentlemen, because there's going to be a slowdown, not a total collapse yet, but there's going to be a slowdown in this economy this year and next year, regardless of the election, regardless of the other things going on, the race to the moon. Listen, we're going to have a slowdown, and that's already, it doesn't take a PhD in economics to figure that out. We have too many dollars chasing too few goods in America, and that's what we're going to be seeing here. That's what Japan saw, that's what other countries saw, and it's just a matter of time before things go downhill with the supply chain again. And not only the supply chain, remember, guys, we have to realize that there's only 12 stocks that's holding up this whole bag of costs of goods and services, as you know. And you know which ones those are: the big five: Amazon, Google, Netflix, Facebook, Tesla, Nvidia, some of these chip stocks. That's fine and dandy, but the production value is limited. What you cannot produce, you cannot eat those stocks, you cannot drink those stocks, you cannot use them as medicine, you cannot use them as survival skills. Those are going to be the skills that are going to be golden for those of us who cannot participate or choose not to participate in this fake rally and fake crypto rally that we're seeing now. So be careful. Continue to be wise, continue to spend your money judiciously as we continue to see this economy shake down slowly. This $15 trillion economy continue to grind ever so precipitously to a halt. And so be careful. Watch what banks you put your money in, and watch what you're spending, and continue to be, faithful in your preparations for survival. And not only for survival, but just for general life preparation as well. I appreciate your support, ladies and gentlemen. Please subscribe, share this video. YouTube is shadow banning. I don't get many support. I don't get much, out there support as I used to. And so just thank you for your support, and I'll talk to you very soon. Enjoy your weekend. Get some rest, get some exercise, have fun. God bless. Talk to you soon.